long run. So now you probably might not have, you feel me? You probably might have started with a low amount, but now that low amount you used to make compared to the low amount you make now is a 10 times difference. So that's the reason why when you're trading, you want to look at percentages. You feel me? You want to look at not number-wise, not the cash value-wise, because now it's going to play with your head and make it seem like in your head you're not making enough. So let me hold this trade a bit longer. Let me do this. Let me enter another entry. Whole time you're doing great on your investment because pretend you put that $100 in a savings account. Did that savings account grow from you making money from it, or did you continuously have to put your own hard work money into that account for it to grow? You know what I'm saying? It didn't grow by you clicking buttons. It just grew by you continuously putting money into that savings account. So that's how that savings account grew. So treat this as an investment portfolio for like, actually take it serious, actually go by percentages, not the cash value. And you're going to see a completely difference in your profits, you know what I'm saying, on how you value the money you do make, you know what I'm saying, and other things in your trading journey, because that's how you want to look at it. It'll be better for you in the long run. So looking at UJ, like what you call it, Kyle was going over the DXY too. I'm bullish on it also. I'm bullish on the DXY. One thing I've seen, right? One thing I've also seen, right? If we're going back in time, looking at the DXY and looking at question. Yeah, what's your question, bro? And looking at the DXY, I like to look at different times and events on what the market was doing to see how the market will further adjust. What's it called when there's a gap between candles like that? Oh, stuff like this, like you could call that a fair value gap imbalance, right? You call that like a fair value gap imbalance, both the same thing. But looking at the DXY, right? If we go to a weekly outlook, reset this chart, right? Around September, right? Looking back, right? Because when you're a trader, you're just looking at previous history and you're dictating in that previous history to see what it's about to do in the present tense and in the future sense, because you got to predict what the market is about to do. And that's really just based off your entries, seeing like what you visualize. So hold on. Let me admit all people into the car real quick. All right, so boom, looking at the DXY, right? If we go back to September 22nd, right? The DXY topped out at September 22nd. And then October, November, December, January, it bottomed out. 2023, right? And then February, March, it consolidated, right? And in July, it bottomed out some more. It tested this support right here. Then July, September, October, November, it bottomed out, and then it started making its way to the downside. January 2024. Then January, it bottomed out in January, started going up February, March, April, May, June, July. July, it did a reversal to the downside. And then September, right? October, November, December 2024, January 2025, it topped out. And now January, February, March, right? We're in March. Let's go back real quick. Every time we've looked at the DXY, it's either topped out around September, right? September, it made that drop. Let's go back to September again. September, October, it made that top and drop. Let's go back. Around April and May now, it's like it pulled a reverse, like a Uno reverse. So around, instead of topping out at September, October, November, around April, May, June, July, August, right? It bottomed out at September and went up October, November, December, January. Let's go back in time. Around January, it usually is at the bottom, right? January 2024, it was at the bottom. If we go here, January 2023, it was at the bottom. But January 2025, right, it topped out at the top. Now, this whole year, it has been bullish, but what I've seen with the DXY is it's retest these zones plenty of times, right? And it's bounced off this structure, right? So we could look for also short-term buys also before the continuation down. Now pretend, you know what I'm saying, it does sell, but it bottoms out here, but it doesn't break these levels, right? Because we're talking about this is 2023 lows, this is 2022 lows, right? These are like yearly lows, right? So it's obviously showing you that the market has created a strong structure at these lows here, right? Every time it's come to this range, it's bounced up, you know what I'm saying? Whether it's a short term buy, right? On the weekly, it may look like short term, but this is, 600 pips, right? This is 600 pips, right? Like on the weekly, it may look like short term moves, but these are big moves, right? This is 980 pips, right? So since it put a Uno reverse card on us, right? It usually bottoms out January and then it'll make that continuation up on back like how we said here, January, or could even start from here, January 2022, made its way up, made its way up, and then topped out October, right? January 2023, bottomed out March, consolidating these zones, took it out here, made its top in October, November, then December, January, it bottomed out again and it ran up 600 pips, right? Topped out in June, and then boom. This time, instead of it bottom out, it topped out January. So since we've been in such a sell zone, the market likes to also correct itself, right? The market likes to correct itself. So I think based off how it's bouncing in these zones, either this month, right? This month we could potentially get like a small retracement, then a continuation to the downside, or slowly but surely is gonna make its way up just for like a retracement before the big continuation down. So when I look at UJ and I see that, right, I go on UJ and just go into the weekly, monthly chart, right? Because if you go on the weekly chart of UJ, or matter of fact, if you go on the monthly chart of UJ, you can see that the market has created support here, right? This green box is support, right? What support is, the market will hit these levels and the market will hit these levels and it would reject off of it. And at times too, it could be a deep wick. So that's why I was saying it has more potential to continue to the downside before we have that full expansion back to the upside, right? But just seeing that it's in this range, it gives me, validation that we have like one more big sell off, probably like 100, 200, you know what I'm saying? 200 pips before we could get that nice push and expansion back to the upside. And if it holds support here, we're gonna get that full expansion back to the upside. But if it doesn't, we'll be looking for way lower costs in the US dollar value. You feel me? So just looking at that, seeing that it's in this green support level, even on the daily, right? If we go to the daily chart, and all we're doing is just doing a top bottom analysis, basically looking at the higher. Yo, holy shit. What is going on? Hold on. Let me remove that. Whoa. Yo, no way. No way. Did I remove that? Hope you guys ain't see that, bro. Somebody was on Zoom wilding, bro. Somebody was on Zoom just tripping just now. Whoa. I hope y'all ain't see that though. If nobody ain't say nothing, I caught it right on time because there was a troller in the chat doing some crazy things, man. I'm not gonna lie to you. That was wild. I was literally texting you. No way. Yo, it was wilding. Yo, yeah, yeah, it was wilding, bro. Nah, that was nuts. But let's keep pushing. Fact. I bet. Yeah, that caught me off guard. That caught me off guard. My fault. Yo, that caught me hella off guard. All right, boom. Looking at the daily chart, right? Just going back in time, right? What you guys saying? going back in time, looking where market structures actually is. I've all seen the market wake out at these levels. If we're deleting this, right? Hold on. As you can see here, right? This was August 2023. This was December 2023. This was September 2024, 2023. The market is getting close to this range, right? And going just back in time, seeing this support level back in 2023, 2024, and we're now going to be in 2025. This shows like it's a high level of like support simply because the market has tapped these zones and it's bounced up right from them recovering, right? So we're getting close to that bottomed out point, I could say, because it's like just looking at previous history, you know what I'm saying, for the US dollar to just break here, that means like the US dollar also like a hell of a big recession would be coming simply because we haven't broke these lows since like 2023, bro. 2023. It hasn't gone this low. So even since we did the Uno reverse and we topped out in January instead of bottoming out, I feel like the start of this year was like a programming of like just resetting the whole economy and how things fluctuate, right? Because like I said, around around January, and we're looking at the daily chart by the way. Looking around January, January bottoms out and we make our way up, right? If we look at January 2024 bottom out and we make our way up, right? But we're looking at January 2025, it topped out. So it's pulling that Uno reverse card because you guys got to realize too, like when we trade, the banks do see, yeah, it was election year. That's how it be, right? Every 4 years, right? Every 4 years, it's like a economy reset, like new things in plan. Like at first, they will like flip the script, but you know how it goes. So January we topped out instead of bottom out, and ever since Trump has been in office, the U.S. dollar has slowly been losing value, and now he just signed the tariffs, right? And at first it did say they are saying that like it's trade wars, it's gonna bring less like the US dollar, back down in value, but it makes us as business owners and people who stays in the United States to use more on money on our like products and goods, if that makes sense. So instead of us importing it from China, Japan, or whatever the case may be, business owners are more likely to keep that money in this economy, right? So since they're keeping the money in the economy instead of giving it to foreigners, that's going to bring the value of the US dollar more up because we're keeping way more money in the economy than distributing it, out to other foreign countries. So that's my perspective on it. Also, that's something I am looking out for to see if it actually bottoms out here, and then we have that continuation to the upside. But this is a trading analysis. I could be wrong. You know what I'm saying? I could be right. It's just based on what I see. But what I do see for now, going to like the hour chart, right? Um, coming here, right? We had this period of this is where when Trump talked, by the way. This is when Trump talked. If we come right here to here, this was that whole week leading up to Trump, talking about the tariffs, whatever the case may be, the foreign countries that's going to get taxed and how we're going to tax them. So that whole month, I said that whole month, that whole week, right? I was calling buys and sells in the was that a whole month? Yeah, that was a whole month. I'm tripping. That was a whole month. That whole month, as you can see, it was actually consolidating in this range, right? Even though we're catching buys and sells in this range, right? These are like 100 pip moves, right? Even if we catch 50, 70 pips, we'll be up. So even though we're catching these moves, right, 100 pip moves, right, on a higher time frames, this looks like, consolidation leading up to a big move, right? And that's exactly what happened here when Trump talked, the markets, we were in buys down here, the markets went up here, right? Did a full expansion, right, to this area right here. And as you can see here, the reason it topped out here was simply because at this level, the market had a break of structure to the downside. Let me get my, let me get my, all right. I call this the three candle sequence. The market breaks structure in three candles. You know what I'm saying? Either to the downside or to the upside. One, two, three, right? It broke the structure here, right? Because this is structure simply because pretend you're building a house, right? You stay in a 3-story, 2-story house, right? And this is your 2-story, right? You done closed off the first story because there was a flood, but you break the 2-story and you got to keep going down. So you just broke that 2-story floor, so there's no support. So now your whole house could get flooded, right? You block it off so you could stop the water, but then you opened and you let that water in. So now your house is gonna flood, is gonna keep going down, but it literally broke structure in what, one, two, three candles, right? So since this was one structure, this is support, right? That's what structure is. It was support, right? It was first going to the upside. It created support down here and it reversed and went to the downside, right? And after it continued to the downside, right, it tests, another area of interest here, right? It tests another area of interest here where the market wicked off, right? And that whole month leading up to, this is why news affect the market. That whole month leading up to, the tariffs, what Trump was going to say, the market was consolidating in these zones, right? Even though we're catching some of these movements, 30, 40, 50 pips, whatever the case may be, that whole play, that whole month was just leading off to big sell-offs, right? So since that happened, right, after it did break structure to the downside, the market wicked off with news and hit this area of interest. You could call this an imbalance, a fair value gap, right? It's just basically where money's still sitting in the market. Because, like I said, these bankers can see our positions and they could see like where people buy entries are, where your sell entries are. They could see all of this in their back office. So their job as a bank, this market is, it's all algorithm. Everything is controlled, everything is manipulated because they see other buyers and sellers. You think they want people to make money off these sales or buys? No, they want to liquidate you out both ways and then go the way they want to go. Now with these markets being like that, it's just best that you're always like, you try to always be on the right side, whether it's, you're getting in and out these trades, right? Because like I said, sometimes you guys will be up 20, 30, 40, $50. Think of it as percentage wise. If you got $100 account, you're up $10, you're up 10%. That's more than enough for the day. You feel me? You ask any investor, big amount, if how much are you making per investment? How much are you making monthly? Some investors, if you tell them you're making 50 to 60% monthly on your investment, they're gonna look at you like, bro, are you doing, is it legal? You know what I'm saying? Like, because smart big investors, they like, I'm saying 10 APR, like 15 APR, 5% APR, because now they're playing big capital. The only reason it looks like a little amount is because you're playing with little capital. So that 5-10% don't really look too big on that small account. But pretend you had $100,000 in your account, 5-10%. You know what I'm saying? Pretend you had $1 million in your account, 5-10%, right? 10% of a million, that's $100,000. So, it's just little things like that that you got to put in perspective. That's gonna make you overall a better trader. So, me just seeing this happen last week, this period of consolidation, the market actually going to grab this liquidity here, and now it's came out, right? Because every time the market drops, it has to correct itself, right? Because I'm gonna keep it real with everything going on too, though, with the news hitting. Sometimes you can't even, you could have an analysis and the market just like, holy, you feel me? Did the complete, like, you know what I'm saying? But the market does has to correct itself. It was big sell-off pressure um last week and going on to this week also. So what I do see, just going back here, I like the question like, okay, it consolidated here, it dropped all the way here. Why did it drop all the way here and stop? Like what did the market touch at this point that made it wick off these levels, create support here, right? And it hasn't gone lower than this point. That's the questions you got to ask, right? So what that makes me do is, okay, let me go on the hour time frame, right? And I know these points are at 140, 45, because I'm looking right here, right? These points at 145.700 through 144.600. We'll round it up. I'm gonna go back in time and see what around here allowed the markets to stop at these levels and create a level of support here. Now, if I go right here, right, 144.600, boom, and I go right here, 145. I said 700. We could even do 619 looking at this, right? Why did the market stop here? Even if we go to the 4 hour to check that out also, right? This is even a more clear-eye view. Like I said, the market likes to break structure in three candles. Back in, October 2024, we had one, two, three candles break this structure right here. The reason why this is structure is because the candlestick stopped right here, and these buy candles punched through this resistance, bringing this up move right after it broke through that resistance right here, right, and it shifts structure to the upside. Look how it ran up. It ran up crazy. Now it's having that retracement. Now the market, the reason now I figured, okay, now that makes sense why it retested these levels is because these are the levels that it broke before it had that big run up. Drop some 222s if that makes sense, right? The reason it tested these levels again, right, and it didn't continue to go down is because it retested levels that it broke before the run up, right? And it never again retest those levels. So that shows you as a trader that, okay, now that the market is actually testing these levels, right? It's created a good level of support here. You can expect a reversal back to the upside because this was a lot of buy pressure, right? It's not just, I'm not gonna say it's not just because it could do it, right? It could just, okay, continue to go to the downside. But since this was a lot of volume, a lot of buy pressure, and this was a big sell-off, there's like a high level of demand here of supply. You know what I'm saying? So since it actually rejected and created structure here and it hasn't broke it yet, there's a good chance that, you could catch a buy back to the upside. So since it created support here, what I'm waiting for is actually like, I'm waiting for it to do this actually. It could do it, not, you know what I'm saying? But I'm looking for it to fill this gap, right? Hold on. This is bugging. All right, boom. I'm looking for it to fill this gap and then potentially, right, happen London, happen New York, just come back to retest these levels here. And then we get a continuation to the upside around these levels for the next sell-off, right? Just because like I said, the market, it likes to correct itself. There's a lot of, you got to also think about it. There's a lot of people here that's in sales. The banks see that. They see there's a whole bunch of people who caught sales entries here, who caught sales entries here, who caught sales entries here. And their head, it's like, okay, I can't just let these people get rich, make money on these sales. They gotta take both parties out, buyers and sellers, and make that big move. So they got to sweep all this liquidity that's sitting here. There's people who's in sales who's been holding since last week, who's up profit right now, who hasn't taken profit, right? Because like I said, they could see that in their back office, in their back ends. So I'm looking for the market to, fill this gap, retest this area of interest here. This is also, this is also an imbalanced fair value gap. What I like to also do too, like okay, the candles broke structure in three, the candlesticks broke structure in three candlesticks, right? Broke this. Now, why did it break structure here, right? And it created this fair value or imbalance here. If you go to the left, right, and go to the left here, there was previous support here that the markets kept on retesting before it dropped lower. So it makes sense why, mind you, this happened Friday. Friday, this happened. And then Sunday, because mind you, it's Sunday here, but it's Monday in Australia. The banks opened in Australia and the markets dropped all the way back down here. So with these market conditions, also it's like, yeah, there was probably people in the buys here. They probably got liquidated and they knew it probably could have made a run back up here. But with these current market situations, it's like you just want to get in and out of these trades. Like that's what I'm saying. Think of your account as percentage wise, because I used to hold trades over the weekend, but now I'm no longer doing things like that just simply because like the economy is moving so crazy right now. It's like you want to protect your profits. But back to what I was saying is the market came down here Sunday open, right? Opened up today, came down here, it broke structure in three candles, right? And it created this area of interest right here called a fair value gap or an imbalance. But right where it created that fair value gap and imbalance is where previous support used to be, right? So that can act as a high level of, of interest that you can look for that the market could bounce off of, right? Especially since it did leave this liquidity down here still. So what I've seen Asia and London do, the markets will consolidate, even though, we could have caught buys down here, right? Because I did see potential buys down here because, when the markets open up like this, they usually like to fill the gap, right? It just only makes sense. But I wanted to see like again, like what happens in the morning and what goes down. So I want to see a retest and then a continuation to the upside, and then we sell off from here. You know what I'm saying? Go back to the downside. So that's what I see on UJ. It's pretty simple. Like I said, you just got to go to the higher time frame, see the overall bias of the chart, see what it's doing previous history, and you just go to the lower time frame to dictate what it could do next and where you could get your entries. That's what you really call a top bottom analysis. And you just want to use news also to really just see how it affects the market so you can see how it executes. So if you guys got any questions or you know what I'm saying, or any yeah, any questions for real, let me know. But if not, you know what I'm saying, we've been on here for a little while. I'll say we call it that. I like that bullish move. Yes, sir. Great call. Okay, okay, okay. Hey, for sure, man. But yeah, like I said, just think of your account as you compounding daily like the penny, right? Those small gains turn into big wins. Because how the hell you started with 1 cent and this crap is at 5 million, just stacking a penny, right? Or timesing it day by day. But it's just showing you compound interest. This is really impossible. I can't, what I'm saying, every penny I get, I stack and I'm gonna end up with that amount. But it's just showing you compound interest and the power of compound interest and just look at things as percentages, right? And also you guys should know the forex hours, right? You should know the hours when you're trading, right? When the most volume is, right? Right now we're in Sydney and Tokyo, right? 5, 6, 7, 8, 9, 10, 11, 12, right? 12 a.m. And then 1, 2, 3. That's when Tokyo ends. But Sydney and Tokyo, it's a lot of consolidation right now. So you might just see the markets fluctuate. And then going on to London, right? 8, 9, 10, 11. This is when you get the most volume in the market because now London banks are open, New York banks is open, the stock market is open. So it's a lot of volume around that time. So that's really like where you're going to see more power moves. But you guys could take a pick of this too. Like I said, just think of your account as percentages. Yo, Kyle, do you want to say anything before we get off, bro? But that'll be pretty much it for the Sunday analysis, right? Make sure you guys just protect your profits, protect your portfolio, and really just, just take it seriously. You know what I'm saying? Like, let's drop some 777s before we call it a quits. But Kyle, you want to say anything, bro, or just end it from here?
Yeah, no, I'm pretty much good for the call. I appreciate each and every single one of you guys. If you guys are joining from my community or EJ, go ahead and give us a follow. EJ has some great content on YouTube and on Instagram. He's getting back more active on YouTube, so definitely drop your IG, bro. And when it comes down to it, I hope all of you guys tap into our free group. Understand it is with Hanko in specific. So if you guys are joining this Telegram or you want to be inside of this Telegram and want to stay, make sure you guys fund up your account with Hanko. Even myself, I went ahead and bought some Bitcoin, so went ahead and put some more into my account because I want to make sure that I can show you guys the results myself. So let's get it. Another way that you guys can actually earn off of this Hanko play as well is if you guys go ahead and make an affiliate link, and let's say you have friends and family that you want to invite to the chat, just make sure you send that your affiliate link to them, and they can join the chat as long as they're a part of Hanko. That's fine. Just make sure that they use your affiliate link and whatnot, and you're tapped in with one of the top leaders. So appreciate you guys, appreciate you, EJ, and definitely shoot us a message, either one of us, if you guys have any questions.
Most definitely, bro. You guys have a good night.
Let's get it. Peace out.